And welcome to the webinar. Today, of course, is Thursday, February 16th, 2016. I'm still saying that it's already February, but it's 2017, and our regularly scheduled webinar. So I want to welcome each and every one of you to the webinar today. Today is going to be a fairly quick webinar. There are a couple of kind of pressure points, if you will, in the market that I want to highlight here today. And maybe just go over one or two earnings, and then we'll open it up towards the end, and we can look at some other charts that anybody desires. But we'll jump right in. And again, as I've been doing, I've been reviewing the monthly charts, and I think this is really very critical at this point. Because of what's going on. I mean, this market is really in what I would call kind of hyper strength. And you can see it here on the monthly chart of the S&P 500. Okay, the upper band is 230369. As of yesterday, we were trading at 2349.25. Now, as you know, we have an objective higher than that price. Okay, but what's really critical here is that, we're kind of in rarefied territory, all right? And, the fact that the market is broken above the upper band means that it's exhibiting just incredible strength, all right? So, we need to be cognizant of this, all right? Now, as I've been trying to say, to me, this is not a reason to consider shorting the market, okay? But it puts us on alert that we're in really rare territory, okay? And I think a legitimate short, by the way, can everybody see the screen? You should be seeing the monthly chart of the S&P. If you are, then I know everything's working. Okay, great. Thanks, Andrew. But I think a viable short happens if we're managed to close back under that upper band. Right now, we are coming up on what I deem to be a very critical price line. And we're coming up on a critical timeline, which is actually falls next Tuesday. All right, the markets, of course, are closed on Monday because of President's Day. So we have a timeline that actually lines up right on the 21st. So it's going to be very interesting to see what happens as we continue to ride up here towards the objective, which of course is 23.75. Now here's oil, and again, this right now is a very concerning element here with oil, because we are sitting again right under the mid-band. And if you look at this chart, okay, we've kind of had 2 months here. We've kind of had 2 months here that have kind of stalled just underneath the mid-band. Now, based on this monthly chart, I expect the mid-band to be taken out. All right. And I say that because at this point, the technicals are showing that there's still strength in the market. But again, we need to be really cognizant of that 54.67 level. And here's the Dow. Now, the Dow had actually closed above it 2 months ago. But if you look at it now, we're well above the upper band. We're about almost 700 points, about 650 points above the upper band. 19,980 is the level. We're now trading at 20,611. And then with the comp, it's the same thing. 5,600 roughly is the upper. We're trading at 58. So again, all three markets now are above the upper band. Now here's the long-term view of the VIX. This, to me, right now is the concerning element. I mean, we are down to really the low end of the VIX. Now, I don't know if we get a spike like we've had here. You can see on this chart, we had a huge spike back in 08, and we had the spike in the middle of 2015. and a couple spikes along the way. We had the spike back here, the spike here. And as you can see, I mean, you know, the VIX has the temperament, if you will, to have these sharp radical spikes like that, okay? And, you know, they always emanate from a low point in the VIX, all right? Now, from this chart, you can see that this month, the low was 997. All right, so we're down to that all-time low level, which is 938. So, you know, we're there, okay? The question is, what's going to precipitate the fear index from spiking? You know, right now, there doesn't appear to be any of that. As a matter of fact, let me go back to this. The thing that is concerning me about the market right now is complacency, which is really the opposite, I think, of the whole fear. You know, it just seems like everybody is bullish. You know, you listen to the talking heads, and you know everybody's piling in, and you know, to me that turns into a recipe for disaster. You know, even the other day it was announced that Buffett increased his position substantially in Apple. All right, and what's interesting about that is that you know Apple's at all-time highs. So you know, there's a lot of positive news floating around, which again, you know, as a contrarian, it makes me nervous. But here's the 10-year rate. Okay, you can see the 10-year rate is in a slow grinding downtrend, though we've had this spike up since last year, middle of last year. But I would expect rates to drop. All right, so this is going to be very interesting because you know the Fed is intimating that they will have an increase this year. Some are even talking as early as next month. You know, right now the rates are overbought. So this is going to be a market that I think is going to dictate a lot what happens here with the market. And again, this is the 30-year rate, and you can see it's virtually identical to the 10-year rate. You know, slow grinding downtrend, you know. Now, we go to our short-term levels. All right, now, as we know, let me take a pen here. As we know right now, the objective is to 2375, okay? And yesterday we closed we hit a high really of 2351. So we're within roughly 25 points of that next objective. But there are a couple of things going on here. I mean, one, as you can see from this chart, it may not be, but we are well above the upper band here on the 60-minute chart. Okay, so we've kind of gotten significantly overbought. So to me, a pullback here would not be unusual. We are in an uptrend, so I would expect another rally if the market did sell off. But clearly, at this point, 2375 is the objective. Now, the caveat I'm going to put out here is this. 2375, to me, is a price line that most likely will not be violated on the first attempt. All right. And if this market has the ability to get through that line, then I think this market has just gone into ridiculous hyper strength. Okay, not that we're not there now. However, it's a very key level. All right, so we've got a couple of things lining up for the short term. First of all is we are approaching that major 2375 line. We've got a timeline that lines up next Tuesday, okay? So that's, what, 2 days away. So this is going to be very interesting to see if everything converges around this 2375 level. Yesterday, we had an anomaly in the market, okay? We had the market closing to the upside, and we had the VIX closing to the upside. And as you can see from this chart, we had a over $1 spike in the VIX. So we're up over 11% yesterday. Now, my feeling is that these upper levels are still going to be resistance, okay? But we are fairly close to the 1250 level. So we're going to know within the next 2 days whether or not the market should correct, or I'll call it profit taking sets in, because 1250, as we know, is a major level. So if the VIX has the ability to get through 1250, then I think it runs up to 1406. And here's the cues. Now, like the S&P 500, by the way, the active objective is to 131 and a quarter. But like the S&P 500, 131 and a quarter is a very strong resistance line. So again, we're quickly approaching it. I mean, we're within basically 2 points of that level. So again, this is going to be very interesting to see if the market has the ability to get through that line. My suspicion is not on the first attempt. And then here's the diamonds. Okay, diamonds right now is above the 206 and a quarter level. Next level up is 209.38. And then here's the TLT. Now, what's kind of interesting about the TLT is the fact that 118.75 has proven to be very strong support. And yesterday we came down, gapped down, and kind of stalled right at 118.75. Today we spiked up, I saw. Now, the confirming line up is 119.53. We can look at that when I'm done with the PowerPoint. But I believe that we are above 119.53. 2 closes above that, we should run up to 122, which again should drive the rates down. And then here's the GDX. GDX got up to almost the 26.56 line, pulled back to under 25. I don't know if it recouped 25 today, but it's possible. But 25 is a strong resistance line. And the XLE has been a laggard here. It's not very vivid on this chart, but it is in a downtrend on the 60-minute. All right. My suspicion is it probably tests 75. I don't know if it tests 71.88 first. Again, 71.88 is a very key price line for the XLE. All right, because if the XLE does close under that for 2 days, it could drop significantly lower. So again, we've got to keep an eye on that 71.88 line and that 54, roughly 54.50 price on the actual spot oil price. Now here's Apple. Okay, the objective for Apple is to 137.5. All right. But like the Qs and the S&P 500, 137.5 should be a very significant price line for Apple. And again, I don't think it gets through it on the first shot. If it does, we know that Apple's going to go higher. And by the way, that's the significance with the Qs and the S&P 500 with their critical lines. I mean, if the market gets through those price levels, then I see the markets heading higher. If they're repelled here, we should have probably we're going to have a pullback. There's no question about it. And then here was a company that reported yesterday. This was Bunge, BG. You know, I just wanted to show this because the strength of this was just incredible. Gapped up, it was up over 10% yesterday on earnings, up almost $7, and just continued to trade up. And again, well above the upper band on the 30 and well above the upper band on the 10. But anyway, that's what I wanted to cover today. And again, it's a fairly quick presentation. There's not a whole heck of a lot to talk about in the markets right now, all right, other than the fact that we are at these significant levels. And my suggestion is, you know, pull off this PowerPoint. I put it through, by the way. I put it through the handouts here, so you should be able to grab it. If you can't, just shoot me an email and I will be more than happy to email it to you. But I want everybody to be fully cognizant here of what these significant price levels are, okay? And I want everybody to be aware where critical resistance should be. And again, as I said, what's going to happen here is it's going to tell us a lot. And as you can see, I mean, we're quickly approaching these, how do I say it, very major levels, all right? So the market, we should know very quickly what the market should do. All right, are there any questions on any of these charts? And then we'll take a look at a couple of live charts. We'll look at a couple of live charts. All right, I don't see any questions, so let me close this down. Okay. All right, now, let's take a look here. Okay, so we hit 2351. That's been the high, and we pull back a little bit here. Yeah, it is a great, thank you, Andrew, for bringing this up. He says upper band equals strength. Upper band also equals an extreme condition, tradable for a pullback if there are some downtrends on higher levels. Otherwise, stand back and get out of the way. That probably sums up the upper bands kind of in a very neat package. And that, to me, is the truth. We look here even at the 60. The S&P now, the upper band is 2343.47. I mean, we are literally within 30 cents of the upper band right now. Now, usually a very great, how do I say it, a wonderful trading opportunity is if the 60-minute chart would be in a downtrend, okay, and it gets above the upper band on the 10 or the 30. And usually that becomes a great short opportunity. Now, in the case of the markets right now, we know it's exhibiting just extreme strength. And I think that's the beauty of using these extreme Bollinger Bands. I mean, we know in an instant, whether or not that market is exuding extreme strength or extreme weakness. And then we can craft trading parameters around that. Or the logic would dictate what the ensuing move should be based upon how the market is trading, either above or below, depending upon the trend formation on higher time frames. So what's interesting about the S&P here is that it's broken above the upper band. When this comes back down with inside the band and it gets oversold, it would be a very good opportunity to get long, because the odds are it's going to favor a retest of that upper band. And very rarely does it not retest the upper band once it breaks down underneath it. And I'm going to show you an example on a daily chart, because I just looked at this morning. This was NVIDIA. And I thought this was pretty interesting. You notice how it broke the upper band, continued to ride, broke it again. Now it came back up, got oversold. I'm sorry, got overbought here. And now you see it's pulling back. And this is what I mean by retesting the upper band. Very rarely does it not retest it once it's violated the upper band. So if you happen to have caught this short, if you look at it, it hit almost 121. It's down $14 in about a week, just off that pattern. And my suspicion is it's going lower. All right, how much lower? Well, it's possible it could come down and fill this gap. which would be a fairly decent move. I mean, it would come down to roughly 70 or 75, just eyeballing that price. But as you see from this chart, this is kind of typical of what happens with the band patterns. Now, a couple other companies, by the way, I was just looking at some of these companies that reported. Cisco reported and had this tremendous gap up. Look what happened with Cisco. Basically went vertical here, all right? And today it's up on earnings. It's a small move. The dollar, 3% move. But look at this. Went vertical and hit the upper band. So, I mean, if you bought Cisco back in here, say, or back down here, you know, based upon these bands, okay, would you be considering taking profits up here today off the earnings? I mean, I think you'd have to seriously consider that. If you didn't take profits, I mean, maybe locking in profits by buying some puts. Because as we know, now look at the upper band here. It's 33.77. Look where it's trading at. 33.78. So it's virtually a penny above the upper band. And then we can help. We go to a 30-minute chart. Okay, now look at the 30. It's well above the upper band. So yeah, I mean, to me, the logic would be, you know, perhaps taking profits and then, you know, look to re-enter the trade. But that's, you know, that's an example of the bands. So we'll see if that comes back within the bands. Here's NetEase. They're up like 12% today, $31 jump off earnings. Incredible. Now this is actually a really good example here, because if you look here, look, it got above the upper band, got above it, failed, pulled back, and look at how it consolidated for about 2 months before it resumed this move. And, you know, this is a perfect example of what I was talking about before, how when it gets above the upper band, all right, usually it's going to make a retest of that, and that's what it's doing now. See, my feeling is it goes up to about 311. Let's see what else NTAP reported. All right, so they've gapped up, and it looks like they're selling off a bit. All right, well, yeah, okay. It got above the upper band, and look at it, it sold off. Now, for the short term, it'll be very interesting to see if it can hold on this particular stock the low of that gap bar. If it does, and it starts to consolidate, odds are it's going to continue up. Let's see, anything else? Yeah, we had Alexion reported. All right, so they gapped up, came back down. Look at it, filled the gap. Let's look at this on a 10-minute chart. Okay, well above the upper band on the 10. And by the way, so the million-dollar question here is, like, look at Bunge. Bunge continued up, and just today, it's still up today. It's still up 61 cents. But now it's back within the upper band. But I think the question for us is, okay, when does it make sense to anticipate it's going to sell off like this, or you have a scenario like Bunge? And to me, usually, that first bar, and you look at the first bar here on the 10, it was bullish. On Alexion, it was kind of a hangman, which is bearish. So usually that'll give you a clue, all right? The next thing to look at is the violation of the high or the low of that first bar as to whether or not it's going to give you a clue, whether or not it's going to come back down. So for example, look at Cisco here. Cisco violated the high before the low. And it's just kind of traded sideways until it gets to the upper band. But to me, at this point, it may not be worthy of a short unless, let's take a look here. The daily we said was 33.77. Okay, now we're at 33.76. Now, this is kind of an interesting setup because it's butting right up against the upper band on the daily. So if this closed back inside the upper band here on the 10, you know, you could literally use a stop at 33.70. What did we say the price was? 33.77. So you'd have a very small risk if you were to take a short here, anticipating that it would come back down. Let's see, anything else? Oh, the Strayer reported. All right, they're down about 9%. Gap down. TRA. Let's take a look here. All right, gap down well below the lower band here. Now, this is kind of an anomaly. I mean, this is, well, it's not that unusual, but if you look at it, it's basically trading within the body of that big bar. And there's your 10. So it's still kind of hanging right in the body of that bar. You know, this to me is probably the least exciting of all these deals. And then there was one more, this ICLR. All right, that really didn't do anything. It's a very small move. So we've got a couple reporting tonight. This Rare reports and DVA reports. DaVita. Now this is very interesting because the one thing I'm beginning to notice, and again, we can watch this for tomorrow, but one of the things I notice is this. When that ADX line gets really low, like look at it right now, it's 868. A lot of times you see a big move off of earnings. So it's going to be interesting to see if that happens on DaVita. And I'm going to make a note here because if that does hold true, you know, as you know, I mean, I've been trying for many years here to try to come up with something that gives us a directional bias before earnings. And that seems to be one of the ones that, you know, looks to have some merit. So we'll see. I'm making a copy of your comment, Andrew, about the bands because that kind of sums up the bands in a nutshell. All right. Anybody want to look at anything? Let me see what else we have. Oh, Fossil had a big gap. All right, now look at Fossil. This is kind of interesting. It had the huge gap the other day off earnings. Obviously, this was the earnings day. But look at the volume that day. It was just enormous. I mean, to me, that was selling climax. Now we look at a 30-minute chart. Now, I don't know. Now, let me see here. The high of the gap bar here is 1910. Look at that. This bar closed at 1913. So it closed 3 cents above the high of the gap bar. And then notice how it consolidated. So say you got long in here, 1913. Look, it pretty much hung right at that 1913. The objective would have been back to the lower band. Now it's closed above the lower the lower band. Let's see what it looks like on a 10. All right, look at the 10. All right, now it's closed back inside. So say you saw this. This is what kind of makes this whole setup particularly interesting to me. A, we had the climax at the open. We had a close above the high of the low bar or the gap bar, and then we had this tight consolidation. So I mean, literally, you know, when you look at this from a risk position, the low of that bullish bar there would probably be a stop level, and that stop level would be that low is 1872. So if you look at this, and say you got long inside, you know, one of these really narrow range bars, closed at 1913. So if you look at this, your risk, if you bought a 1913, was down to 1872. That's 25, that's what, like a 40-cent risk. Now we see it's violated or taken out the low of the gap bar. I'm sorry, the lower band on the 10. And it's proceeded to move up. So now we know the next objective here would be about 50% of that gap. So if we look at that, the next objective would be roughly to 21, okay? So we're about $1 away from the objective. So this would be right in here, would be, to me, objective 1. Objective 2 would be a gap fill, which is 2280, all right, which also is right around the mid-band. All right, the mid-band is 2240. So the way to trade this would be to just watch it, okay, track it up, all right. If it starts to stall at 21, then you close out. But if you think about it, that's about a $2 move, almost a $2 move on a 19, roughly 13 entry, which is about a 10% move. So that's where these earnings or post-earnings move can be sexy because, you know, if you think about it, say you bought a 20 call, right? And again, I don't know if they have weeklies. But let's take a quick look. I'm just pontificating about this particular deal because it just happens to be one that reported this week. But these patterns are pretty similar, okay? They seem to happen over and over again. So let's take a look here. Oh, well, wait a second. Okay, so the monthly is the weekly because this week is the expiration. So if we look at trade, it's at 1995. Okay. So say you did the 1950. Let's take a look. All right, so today it opened at a quarter. The low was 24 cents. All right, right now it's 40 to 55. Let's say you paid 30 cents, okay? And again, this is a 1950. So if this were to go to the first objective, which is 21, yeah, this would be worth about $1.50. So you have a triple. Yeah, exactly. And hell, if it filled the gap, what do we say was 22.80? So this would be about 230, 250 roughly. I mean, you have almost a 10-bagger if it filled the gap. But you see, what's kind of nice about these particular setups is you don't need to buy a lot of time. So you gain the benefit of the extreme leverage using the front week. Because we know either the move's going to happen in a day or two, or it's not going to happen. So anyway, you know, here's an example right today of a company, you know, a stock recuperating from an extreme down gap. And again, what's interesting about Fossil is that, you know, it did have that huge selling climax off the open. You look at that bar. In the first 10 minutes, 2.752 million shares traded hands. And I just want to see something here. Okay, now look at this. The average volume is 1.5 million. And in 10 minutes, 2.75 traded. All right, so you can clearly see how, you know, it was essentially a selling climax on that, in that 10-minute bar. Okay. Anybody have any questions or comments? But that's what I wanted to cover today. Not a lot of companies reporting this week. I mean, you know, most of the major guys seem to have reported already, which is usually the case. We've got Deere reporting tomorrow. Excuse me. Now look at Deere. Deere has been kind of, you know, it did the retest of the upper band. So this is going to be interesting to see if Deere sells off on their earnings. Let's take another quick look at the markets. All right, now we're heading back up. Q's starting to head back up, and the VIX. All right, look at it. VIX got to 1286 today, and now it's pulling back, and it's back under that 1250, which again, I felt 1250 would be resistance. See what the TLT's doing. Okay, TLT jumped. We know what, 119, what's the confirming line? I can't remember all these numbers in my old age. Here it is. Okay, it's 119.53. And look at it. Now we're, what, about 36 cents above it. So this is going to be interesting to see if the TLT can hold 119.53 today. If it holds it today and tomorrow, then I expect to move up to 122 area. But again, look at how 118.75 has been support. And by the way, just to point this out, I mean, look at it. We had it stop here once, twice, 3 times. Here's the 4th one. All right. So literally, you know, it was 118.65 pivot low. We know 118.75 is the support line. I mean, you could literally buy that there, okay, with a very, very small risk, because if it violated the low of that pivot low there, you'd want to close the long. But it ran up with an objective. Had you been long there, your objective would have been to the 119.53, all right, or to the mid-band. It almost hit the mid-band, and that's where it was repelled. So that's a nice move there on a short-term option. If this were a Friday, this is probably at least a triple on the option. Okay. All right. Well, that's what I wanted to cover today, guys. If anybody has any questions or comments, shoot them through. If not, then we'll reconvene in 2 weeks. And remember, we've got markets closed Monday, President's Day. So it's a long holiday weekend. I would... yeah, I don't know how we can do that, Chris. Unless you email me. Yeah, just so you know, Christopher, I emailed you yesterday. If you didn't get that, let me know. I don't know if it's going to a spam folder, but I sent you an email. That's really weird. Do me a favor, check your spam folder. That's really strange. Send me the email here. That's really strange. That is... All right, you know what I'm going to do is, send me an email at this address. I'm going to send you an email. I'm going to send you an email at the same time simultaneously, and we'll see if they're actually getting through. I mean, I'm using Gmail, which there usually isn't a problem with, you know. Yeah, that's probably the best bet. And I'll send an email to both addresses. But what's strange about Gmail is you usually don't get blacklisted from a Gmail account, which is really why I use it. You know, I think it's one of the more user-friendly servers. So I don't, that's very strange. Because I literally sent you an email yesterday, which you probably didn't get then, which is making me a bit concerned. So if you send me the 2 addresses, I'll respond to both of those addresses, and then we can see if one of them's not working. Very strange. All right, well, listen, and by the way, if anybody else has any kind of technical glitches, shoot me an email. And again, if you have any other comments or concerns, just shoot me an email. We'll deal with it. But anyway, thank you very much for attending today, and you know, we'll convene again in 2 weeks. Thanks so much.